Whether you are new to investing or an experienced stock market investor, learning about the 11 various stock market sectors is paramount. And in this video, we're going to be talking about that. We'll be going over the 11 different stock market sectors, providing you examples of high quality stocks in each of the category with a focus on dividend stocks. These would be hand-picked examples with high dividend yield that are considered to be undervalued or reasonably valued at this time. And at the end, of course, we'll be sharing our own stock market portfolio that hovers around $112,000 in amount. Let's get into it. Here is a quick overview of 11 stock market sectors that are listed. You'd notice the 1 year performance of different market sectors, with communication services being down close to 30% 1 year, whereas you see a number of sectors that are showing positive returns, a handful of them. For instance, energy sector is showing a positive return of 36% almost, followed by utilities, which is showing close to 11% positive returns. Many of the stock sectors are currently showing a negative return. As for S&P 500 index, in terms of its 1 year return, is showing to be down by close to 12%. Let us now dive into each one of the stock market sectors one by one and provide you examples of high quality dividend stocks in each sector. The first one to review is communication services. For this sector, we are looking at a price to earnings ratio for this year's estimate of 17.74 and the earnings per share for trailing 12 months of $38.31. The dividend yield for the communication services as a whole is at 5.77%. The three stocks that we've handpicked here that are considered to be undervalued or reasonably valued from communication services include Verizon, TELUS, and Omnicom. For Verizon, you are seeing a dividend yield of 5.01%. TELUS is showing a yield of 4.75%, and Omnicom is showing a dividend yield of 4.40%. These are handpicked in a sense that are considered to be undervalued or reasonably valued and have safe or very safe dividend scores. Moving on, our second sector to review is consumer discretionary, which has about 11% of the overall market weight in the stock market. It has a price to earnings ratio of 45.04, definitely much higher valuations for the stocks in this sector. As for its earnings per share, we are looking at $7.33 for the consumer discretionary sector. The dividend yield for this sector is at 2.34%. The consumer discretionary sector encompasses those industries that tend to be the most sensitive to economic cycles, and its manufacturing segments include automotive, household durable goods, textiles and apparel, leisure equipment, and the service segment as part of it includes hotels, restaurants, and other leisure facilities, media production and services, and consumer retailing and services. The four top picks here when it comes to consumers discretionary include Kohl's, Foot Locker, Cracker Barrel, and Best Buy. As for Kohl's, it has a massive dividend yield of 7.13%, which is quite high, and especially if you compare it to that of the dividend yield for the entire sector. Foot Locker, you're looking at 6.43% dividend yield. You see from the graph right next to it how this dividend yield is kind of over the past 5 years has been changing. Definitely, it's much higher than its own 5-year average. Next, as for Cracker Barrels, it has a 6.18% dividend yield. And as for Best Buy, it's definitely one of its highest dividend yields in the past 5 years, currently at 5.32%, suggesting it could be a good time to add these shares to your portfolio, should you believe that in terms of their financial stability for the long term, and believe that these are good picks for your portfolio for the long term. Our third stock market sector to review is consumer staples, with the price to earnings ratio for this year estimated to be at 20.19 and an earnings per share for trading 12 months of $5.26. For consumer staples, we are looking at the dividend yield of 2.63%. And the four stocks that we've handpicked here include Philip Morris International, Walgreens Boots Alliance, Unilever, and Kimberly-Clark. For Philip Morris International, you're looking at a dividend yield of currently at 5.09%. Walgreens is showing a dividend of 5.06%. Unilever has a dividend yield of 4.20%. And lastly, Kimberly-Clark has a dividend yield of 3.42%. Consumer staples account for approximately 7% of the overall market weight. Now, before I continue this video, I wanted to share with you a word about our video sponsor, Neo Financial. As a financial technology fintech company, Neo Financial was built on the premise that Canadians have been underserved in their finances for far too long. Hence, they're on a journey to reshape the financial future for millions of people in Canada. Personally, I've been using Neo Mastercard for a number of weeks and absolutely love it. This card has no annual or monthly fees and allows you to keep track of your spendings with real-time notifications. You can easily add your card to the Apple or Google Pay Wallet app on your phone and use it anywhere MasterCard is accepted. With NeoCard, you can get an average of 5% cash back at Neo partners and a minimum of 1% back across your entire monthly spend. The average is based on current offers at select partners, and cashback varies per plan, offer, and partner. NeoCard gives you access to nearly 7,000 loyalty programs in your pocket, allowing you to explore offers from your favorite places or uncover something new. The best part is you will receive $50 when you sign up for this credit card if you use the referral link. So what are you waiting for? Discover the credit card with instant approvals, cashback, and thousands of loyalty programs built into one, and start earning cashback on your everyday spending with the Neo card. Our fourth sector to review is energy sector with a price to earnings ratio of only 10.37. As for its earnings per share, we are looking at $4.97, and it has a dividend yield of 5.19%. The four stocks that we've handpicked when it comes to energy sector picks include Magellan Midstream Partners with a dividend yield of 8.66%, Enterprise Products Partners with a dividend yield of 7.65%, Kinder Morgan with a dividend yield of 6.63%, and lastly, Pembina Pipeline, ticker symbol PEA, and a dividend yield of 5.74%. Energy sector accounts for approximately 4% of the overall stock market. The fifth sector to review is financials with a price to earnings ratio of 10.65 and an earnings per share trailing 12 months of $10.99, close to $11. The dividend yield for financial sector is at 3.62%, which is why you would be excited to see our picks for the dividend stocks. We are showing you four handpicked undervalued or reasonably valued stocks, including Main Street Capital with a dividend yield of 6.67%, almost double that of the sector's dividend yield, followed by Bank of Nova Scotia with a dividend yield of 5.51%, Canadian Imperial Bank of Commerce, ticker symbol CM, with a dividend yield of 5.35%, and Prudential Financials with a ticker symbol of 4.99%. I would like to bring to your attention that even though some of these businesses are Canadian, they're all available in US dollars. That's why we are handpicking these, allowing all investors from across different nations and geographical locations to be able to invest in these stocks if that is something that interests them through the US dollar stock markets. Our sixth sector to review is healthcare with a price to earnings ratio of 36.17 and earnings per share trailing 12 months of $7.41. The dividend yield for healthcare sector is at 2.21%. We have another four top picks for investors in healthcare that we would like to introduce. The first one is Gilead Sciences, ticker symbol GILD, with a dividend yield of 4.72%, followed by Cardinal Health, ticker symbol CAH, with a dividend yield of 3.79%, Amgen with the ticker symbol AMGN and a dividend yield of 3.19%, and lastly Merck, ticker symbol MRK, and a dividend yield of 3.04%. All of these dividend yields are currently higher than that of the healthcare dividend yield average. The market weight for healthcare sector accounts for approximately 15%. Our seventh stock market sector to review is industrials with a price to earnings ratio of 28.02. As for earnings per share trailing 12 months, we are looking at $6.94 for this sector, and a dividend yield here is at 2.37%. Our top three picks here include 3M with a dividend yield of 4.65%, which is the highest it has kind of had on record for the past 5 years, judging by the graph that you see here. MSC Industrials has currently a dividend yield of 4.04%. And lastly, Lockheed Martin showing a dividend yield of 2.62%. All of these are considered to be undervalued or reasonably valued at this time, and we would like you to consider them potentially to add them to your watch list. On the eighth sector spot to review is information technology. Here we are looking at the market weight of 27%. This is the largest stock market sector by market weight, with a price to earnings ratio of 26.56%. Definitely, this price to earnings ratio has cooled down compared to about 6 months or even a year ago, where the stock market was trading at much higher valuation. Ever since the Nasdaq has definitely took a kind of pullback and gone through its correction and a huge decline in terms of the valuation of many of the stocks. As you know, Nasdaq is very much tech heavy. That's also reflected in our information technology sector performance. The dividend yield for information technology sector is only at 1.35%. Understandably so, because many of the companies in this sector are growth-oriented businesses and not necessarily are dividend paying, which is why if you can find high quality businesses in information technology that do pay decent amount of dividend, you might be quite interested to consider them to add to your portfolio or at least to your watch list. Here we have 4 handpicked information technology stock for you to consider. The first one is IBM, International Business Machines, with dividend yield of 4.71%. Intel, with ticker symbol INTC, has also a dividend yield of 4.03%. You'd notice how that dividend is one of actually the highest levels that it's recorded in the past 5 years. Cisco, with ticker symbol CSCO, is showing a dividend yield of 3.61%. And lastly, Broadcom, ticker symbol AVGO, with a dividend yield of 3.46%, is another pick for you to consider. On the ninth spot of market sectors to review alphabetically, we are looking at materials. Here, the price to earnings ratio is only at 8.5, and the earnings per share is at $5.92. The dividend yield is slightly higher compared to the information technology or many other sectors that we reviewed. We're looking at 4.73%. The 4 stocks picks that we've selected here include International Paper, IP, it's a ticker symbol, with dividend yield of 4.46%. Packaging Corporation, PKG, dividend yield of 3.66%. Eastman Chemical, dividend yield of 3.47%. And lastly, Sunoco Products, with ticker symbol 3.39%. I would like to remind you that the reason we've picked these stocks and not necessarily gone over the ones that have higher dividend yields, we've tried to handpick the ones that are considered reasonably valued or undervalued at this time. And that's been really key consideration. We've not just tried to go only for the highest yield. We wanted to make sure that these picks meet those criteria of valuation for us. Next, we are looking at real estate. This is our 10th sector to review, with a market weight of approximately 3%. The price to earnings ratio here is at about 27.47. The earnings per share is at $3.46, and dividend yield for the sector is at 3.40. Our first pick in terms of dividend stocks here is Brandywine Realty, with a massive dividend yield of 7.85%, just incredible. Medical Properties Trust, MPW ticker symbol, also has a high dividend yield of close to 7.5%. Care Trust, CTRE, with dividend yield of 5.88%. And lastly, Highwood Properties, with a dividend yield of 5.81%. These are our top picks when it comes to dividend stocks in the real estate at this time. And lastly, on the 11th sector for us to review is utilities, with a price to earnings ratio of 23.22 and an earnings per share of $2.45. The dividend yield for utilities hovers at 4.26%. Our 4 top picks for utilities sector include Canadian Utilities, ticker symbol CDUAF, dividend yield of 4.67%, followed by Pinnacle West Capital, dividend yield of 4.61%. Alet, with ticker symbol ALE, and dividend yield of 4.36%. And lastly, Northwestern Corporation, ticker symbol NWE, and a dividend yield of 4.21%. Looking at a couple of key observations upon this review, the sector with the highest average dividend yield at the time I'm making this video, was communication services with 5.77% yield. The sector with the highest return on equity was information technology, with the trailing 12 months ROE of 47.35%. Return on equity is considered a measure of how effectively management is using companies' assets to create profits. The best one-year performing sector was energy with 35.85% return, and the largest sector in market capitalization is and continues to be information technology with $11.91 trillion. Lastly, as promised, we're going to take a quick look at our portfolio with Questrade and Wealthsimple Trade, in total hovering close to that $112,000 valuation. For our Questrade, we are looking at a value of total value of around $94,000. It is divided between our two non-registered accounts as well as tax-free savings account and registered retirement savings plan. Total valuation for this portfolio in terms of the performance is down by close to 17% at this time, or down about $19,000. Our top holdings, we're going to take a look at the top 7 here, include the Vanguard Investment Equity Canada. It's all equity ETF, VEQT. Here we have 2,245 shares. It is down, this portfolio, and it is down by close to 12,629%, down approximately between 12 to 15%. As for the last price for VEQT, it was traded at the price of $30.73. This is our largest holding. Following that, we have shares of Boeing. It is also down by close to 6,600. We have 57 shares of that with an average price of $254, whereas last trading price for Boeing was at $137.80. That's for that. We also have shares of Canadian Solar Incorporated. It's traded in US dollars. We have 120 shares. It is also showing to be down. We are currently in negative territory at close to $1,400. Poshmark, we have 100 shares. We are down huge on that as well, more than 50%. It is down by close to 1,600. Tattoo Chef is another holding that we are negative in. These are supposedly some of our growth stocks picks, but definitely have done so poorly. Our 150 shares here is showing to be down by close to 1,800. We have a number of shares of TQQQ, which is a leveraged portfolio, kind of investing fund, and it is showing to be down by close to $382. We have 34 shares of that. And lastly, as promised, our 7th pick here is EVgo. We have 110 shares. It is showing to be negative close to $1,200. These are our top 7 holdings in terms of the market valuation. We've ranked it by then, and you're seeing here. As for them, you notice all of them are currently in negative territory, and all in all form a largest portion of our kind of losses at this time, unrealized losses, because we don't intend to necessarily sell them at this time. As for our portfolio with Wealthsimple Trade, things are definitely better here. We have our funds divided between personal account, registered retirement savings plan, and tax-free savings account. As for our personal account, we have 8 positions. And so let's take a quick look at what they are. I'm going to show you very real quick here. These include Bank of Nova Scotia, EAGB, Real Matters, Royal Bank of Canada, Toronto Dominion Bank, Ryzen, 𝗖𝐋𝐈𝐖, and 𝗖𝐋𝐈𝐿. Those are our picks when it comes to our non-registered account. Let's take a look at Registered Retirement Savings Plan, RRSP. Here we have 10 holdings, including Artis Real Estate Investment Trust, Dividend Growth Split Corp, Greenland Renewables, PIMCO Dynamic, Skyworks Solutions, Toronto Dominion Bank, VDY, which is a high dividend paying ETF, and VFE, as well as VMD and 𝗖𝐋𝐈𝐿. We are showing you all of them with transparency, so you can see exactly our holdings and what they are there and what they have been their returns. Lastly, in our tax-free savings account, we have slightly higher number of holdings, including Bank of Montreal, which we have fractional shares of, as you notice, close to 0.4 fractional share, 40 fractional share. Bank of Nova Scotia, Beyond Meat, Cars, EAGB, Greenlane, Hyliion, Manulife, Neo, PDI, Plug Power, QQC.F, which is Invesco NASDAQ 100 Index ETF in Canadian dollars, Real Matters, Royal Bank of Canada, Shopify, Toronto Dominion Bank, and VDY. These are our entire holdings in our Wealthsimple Trade portfolio as well. Thank you so much, everyone, for watching this video until the end. I hope you found it beneficial and gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, high-quality growth stocks, and penny stocks. We also talk about investing in crypto and ways to reach financial freedom. Thank you, and I hope to see you next time.